Let's get value add from a guest. Francis Tan joins us, Chief Strategist Asia at Indosuez Wealth Management. He's our guest host for this entire hour of Squawk Asia. Francis, see you again. And always a pleasure having you on the show. I know you've been on the road speaking at a lot of client events, and I'm sure the big question that you get asked all the time is, look, this Middle East war, what does it mean for us? What does it mean for energy security and inflation? What are you telling them?
Well, right now the rhetoric seemingly across the entire investment community is that how long, first thing, how long will the war?
Duration.
Yeah, the duration. Yeah. But you need a very nice crystal ball in order to answer that kind of question. So nobody has really the crystal ball. Even if the US wants to stop the war, Israel may not want to. And even if Israel wants to stop the war, Iran may not want to, because as you mentioned just now, tit for tat. Yeah. So now the US no longer has a monopoly over when to stop the war. In another situation whereby if you think that the war is going to stop, let's say tomorrow, but the capacity already lost and the security is not going to come back up overnight as well. So for majority of the other nations that rely quite heavily or are very independent of the oil or the energy exports from the Middle East,
most of Asia, right?
Exactly. That's going to continue for a while more. So right now the rhetoric is that higher energy costs is the first order effect. Will it translate or transmit into a second order effect whereby the prices of every other things, including urea for fertilizer, into food prices, meat prices, or even wages, will there be a second order or even third order impact on the rest of the economy? If there will be, that means that generalized inflation will go up across the entire consumer basket, and central bankers are going to sit up right now. They are not going to act too much on the first order impact because that's just an energy shock, exogenous shock. But if it becomes endogenous into raising the general prices of central banks will have to start hiking rates, and that's what is getting quite fearful.
When you connect all the dots, right, recession is the risk or the worry, right? After we get over this inflation fear or scare, recession is the risk. And is there also a concern, are people asking about, well, look, how much really can policymakers do in response, right? When it's not a demand side problem at all. This is very much a supply side problem.
Shock. It's indeed a supply shock. Yeah. But like I mentioned, a supply shock, policymakers will just watch the data, might be transmit into a demand shock, which is consumers tightening their belts. Because let's say if you only spend, let's say 5% a month of your entire household expenditure on energy. Now, because of higher prices, it becomes 10, 15, 20%. You're going to tighten your belt and spend less on others. So there's a substitution effect from a higher energy prices or consumption to the other basket. You're going to reduce. Now, your expenditure is someone else's income. So if the impact comes into your manufacturers, your F&B guys, your restaurants, because of that, I'm going to less restaurant trips this week, or rather this month, then they are going to have a trickle-down effect the economy, thus causing a demand-led type of a downward spiral.
Should investors be in cash?
Okay, so now we think that investors should increase their holdings of cash right now, because just answer this frankly, if you can't think about when the war will end, and if you can't think about, so what if it ends, whether the impact can remain or linger over there, then it's time to increase your cash allocation because you are just simply uncertain.
We had somebody on just a couple of minutes ago, another guest who was saying that, look, no, not cash, right? Stay invested, just ride it through, see it through. This isn't going to last forever.
Of course, it depends on your time horizon. Not everyone has the same time horizon. For someone who just close your eyes and you think if you're going to wake up 1 year later, probably you're going to see us moving back up again. But I would say that you can increase your allocation in test. That's on the tactical approach. That allocation will not be in cash forever. So if this sell-off continues and we finally see some sort of a bottoming process, what we are seeing that is impacted quite strongly are the long duration, the previously very high valuation, Max 7 tech counters. Those should be in your watch list for the opportunity that's going to come up.
What about gold?
Gold has sort of had a bottoming process. We are long gold. We think that in this new normal of uncertainties in the geopolitics of the world, and any sell-off in the gold is mainly the other asset classes. So right now, after the nice decline in gold, we are seeing a bottoming process, and we think that gold is going to go back up again. Our target remains at 5,005.
Is the no-brainer long energy?
Well, energy prices has gone up a lot. ETF has gone up a lot as well. If you don't have some allocation in energy, always have some, but don't go overboard and putting everything in one basket.
Because, I mean, to your point that you made a couple of minutes ago, even if the conflict, if there were peace talks and all three sides, U.S., Iran, and Israel, I take your point that it takes three hands to clap in this war, right? If they were to go, okay, fine, we're going to stop fighting, right? The damage that's been wrought on facilities and infrastructure, physical infrastructure, right, cannot and will not be fixed overnight, and that will affect the flow of energy outbound.
Yes, it will be for many months, in fact, I think. And the insurers, whether they are up and happy to start to insure the tankers, I don't think so. So there will be some lag, implementation lag, capacity lag. So I think that this process will be probably a more inelastic one than investors are now thinking, especially when you look at the crude oil futures.
Yeah, that's a good economist term, inelastic. Good stuff. Francis, great points. Stay right there. A lot more to talk to you about. We'll pick it back up with Francis Tan, Indosuez, coming up in just a little bit. Meantime, we'll take a quick break. Squawk Asia is back after this. All right, let's get value add. Bring in Sarang Shador, director of the Global South program at the Quincy Institute, responsible statecraft. He thinks what's happening in the Middle East right now is a reckless U.S.-Israeli obsession that will hurt the developing world the most. Our guest host, Francis Tan from Indosuez Wealth Management, is part of this conversation as well. Sarang, great to see you. Appreciate your time and a pleasure having you on the show. First off, before we break things down, tell me why you think the Middle East war is a reckless obsession on the part of the U.S. and Israel.
Well, there's a whole political side to it. But there's no question that with the war that started, the continent of Asia, its interests, and many of them are, or at least some of them are U.S. allies, and many of them are U.S. partners, have not been taken into account. And energy is one clear channel of hurt and pain that is going to transmit, as already is, causing a lot of stress and pressure on the people and governments on the continent.
Okay, Sarang, let's move on to the other part. What evidence do you have that the developing world, in other words, the global south, are most vulnerable to the effects of the war from the Middle East, primarily this oil shock, but there are many other things as well?
Many global south countries, many developing countries are energy importers, and certainly that's the case in Asia. If you look at South Asia, India, Bangladesh, if you look at Thailand, if you look at the Philippines and Vietnam and others, they don't produce a lot of oil and gas at home. Some of them don't produce much at all, and they import what they need. Now, these are also growing economies. The growth rates of many of these countries are higher than that in Europe or the United States. These are countries at the stage of middle income development that need a lot of energy to go to the next level for their populations. And so when this crisis comes along, a very important aspect of their future, their aspirations, is suddenly at risk. And because they're not yet wealthy countries, they can't necessarily bid the sort of prices that we are seeing in the market right now. It's a supply-constrained market, and that means prices go up. And if they go even more, then we're going to see serious fiscal pressures. In some cases, supply shortages, like in the case of petroleum gas in India, there may not be actually enough for everybody's needs. At the moment, the situation seems manageable. But if this crisis goes on for another month or so, or 2 months, then we could be in a tough position. The same is true for diesel, refined oil products, that so many countries in Southeast Asia, for example, depend on, even South Asia, for long-haul transport, for food, groceries, all sorts of other items that their populations need. That feeds into inflation. And again, we are talking of a lot of people who are lower middle class, or some of them poorer, where it's going to hurt, and governments are also going to face the heat of all that happens.
I hear you. Sarang, listen, I want to get your snap, immediate reaction to something which is happening in markets as we speak. And we're showing folks, I'm not sure whether you can see it, but we have actually turning tail from month NYMEX. Top of your screen is at 101.1. So it's easing back. It had been as high as 105. So closing back on in on that 100 level. And Brent has slipped to 111.76. And apparently, I'm not sure if there's a direct connection, but this is the price action, looks like reaction rather, to a story just out in the Wall Street Journal. So far, only source to the Wall Street Journal, that the president is willing to end the war, at least without opening the Strait of Hormuz. What is your reaction to that? And is it another example of what a lot of cynics or critics are saying, sporadic verbal intervention from the Trump administration solely to keep the oil price from ramping too high?
Well, there's certainly a great concern in the United States as gasoline prices are going up, and we have midterms coming up in a few months. The pressure to actually talk down the markets on oil prices is there for politicians. But we don't know exactly what's happening in terms of the war, because every day we get a different story. Sometimes we have deadlines that then change. We have reports of negotiations which then are contradicted. So I'm not sure what to make of the latest report. But prices in general are higher. And remember that what you're seeing there, Brent crude, is a London quote. But there's also local prices here that depend on various factors. There's also another factor here at work, which is that many countries import refined oil products because they cannot refine crude oil domestically. And refined oil products like diesel, for example, their prices have actually gone up more than crude oil. So the way this exactly transmits to pain is quite variable and is perhaps a little bit worse than what just the Brent crude oil tells you, the price of Brent crude tells you. In Asia, the pain is actually, certainly for the developing part of Asia, it's worse.
Fair enough. Francis, come on this.
Right. Thank you very much. I would think that the situation now that we are seeing in energy somewhat reminds me a little bit of a COVID, whereby countries realized that they need to have some capabilities and capacity for masks, and they were rushing out to have bilateral ties with other countries. Now, do you think it's a new normal, even after this situation that we have now, where energy is an exogenous shock to economies developing, whereby in future we may see more bilateral agreements amongst especially the global south, and also perhaps even the bartering of goods just for energy?
Yeah, sounds like what Francis is referring to is sort of the energy, oil, or gas equivalent of financial swap lines, you know?
Yeah. Well, we are in a sort of a new world, because in the past, the worry was always a demand shock of some kind. But now we are seeing supply shocks more and more. So you mentioned COVID, which was a classic shock of both demand and supply in that case. But certainly also supply, because we had economies lose steam, we had abilities to produce affected because people were sick and couldn't come to work and so forth. So, and this war is certainly a massive supply shock. So how's the global south going to respond? Well, the old adage is that you diversify, 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 because if you get a supply shock from one geography, then you're covered at least substantially by other geographies. The problem here is that a commodity like oil is pretty globalized. So if you take off the production or supply from one part of the world, and as strategic and important as the Persian Gulf, then you're really affecting the global oil situation and global oil markets. And it's a very different kind of a question on a country that's not particularly wealthy, that's middle income or even less than that. Can we see swaps? Well, we used to have, different arrangements for energy trade back in the Cold War days. The Soviet Union used to supply energy on a barter or a basis that was bilateral and often to certain political concessions or understandings. Are we going to see that come back? We are seeing a more fragmenting world order. We are no longer in a sort of a flat world, as Thomas Friedman used to call it back in the 90s. And certainly regional initiatives, regional understandings, bilateral understandings. All of these are now on the table.
That's very interesting. Now, we know that the world has been moving towards renewables, clean energy, climate change. Do you think this wave of the big energy shock will further accelerate the embrace of ESG-friendly type of energy production for the rest of the world, particularly the global south as well?
I think there's no question that the longer-term lesson from this crisis is that renewable energy is a safer bet. Not because it's entirely free from supply shocks, because after all, production of solar panels is predominantly from China, for example. The difference, though, is that renewable energy technologies do not depend on fuel imports. Once you import a solar panel or an array, install it, it will produce electricity for you for at least 25 years. And that actually makes a huge difference because you're not reliant month to month, quarter to quarter on a fuel from some geography that might be at risk. So there's no question that this sort of approach to getting energy, which is more localized, which is more, let's say, resilient, is going to be the wave of the future. It already is a wave of the present in much of the global south. We are seeing massive uptakes of solar electricity, for example. Of course, started that early in 2014, but and of course China is well ahead. But then Vietnam and now more recently many countries in Africa have become major importers of solar panels, are starting to include that in their matrix of energy. And we need another 5, 10, 15 years till this transition is much more advanced, including in transport, in EVs, for example. So we are in a period right now of transition, an interregnum, if you will. The next decade or so is going to be laden with risk, but that risk will go down with time. I'm not suggesting that we are going to be fossil-free, because fossil fuels are going to be needed for many applications, including things like plastics, including things like certain kinds of manufacturing, semiconductors, for example, source helium from the Gulf, from Qatar. So there are many ways in which fossils are going to remain a part of our lives. But a reduction of dependence on fossils is certainly the long-term trend, and it will only accelerate after this war.
Sarang, talk to us about a potential geopolitical transition that I know you're thinking and also writing about. I mean, as you well know, as we all know, I mean, even before this conflict started, Asia was in this position where it depended on the West, or rather on the United States, for its security, but obviously for trade, investment, etc., on China. Let's just say that, right? What happens from here? I know you've been thinking about how, should the U.S. come out of this not looking so good, it would obviously hurt its standing, its reputation, and potentially embolden China. If that is the case, wouldn't that put the squeeze even further on all the Asian countries in the middle, right, to literally have to make a choice? Do you want security from Uncle Sam, or do you want investment dollars and trade from Xi Jinping? I mean, I don't think any of those countries want to be in that position, but are you concerned there's a risk that they will be squeezed or pushed into that position?
There is that risk in the sense that U.S. has taken a big knock in this war, not just because the way the war was initiated, without a clear rationale, without a clear strategy, without a sense of when this is going to end, without a sense of the allies and partners in Asia of how we're going to get through this together, but also because the sorts of things that have happened in the nature of the conflict have required the United States to move some of its defensive assets, for example, from South Korea to the Gulf. I'm referring to the air defense, the THAAD system. But there are also a sort of a sense that the United States may be acting in ways that don't necessarily benefit all regions of the world, and may even harm some regions of the world. And that reduces a sense of trust, reduces a sense that there's a partnership here that works for everybody. And that gives an opening to China, which has, of course, been playing this game for some years, saying that we are more reliable, we are more stable, depend on us. The problem is many Asian countries, while they want to trade with China, they don't want to cut off ties with China. They certainly don't want a conflict. Nevertheless, do not want a unipolar Asia. They want balancing in Asia of some kind. They want middle powers to rise so that China is balanced. And they would like the United States to be present as a part of that. But increasingly, it looks like the United States could end up being more a liability than an asset. And that leaves in Asia in a difficult position for the next decade or so until they can rise sufficiently so that they create a sort of a balancing dynamic in Asia.
Sarang, for developing Asia, which is part of the global south, of course, places like Thailand and the Philippines, where we've already started seeing protests. People are angry because their lives are getting harder. I'm curious, and I know I'm sure you've been following it. Are you concerned that this could lead to political troubles? And not just because people's lives are harder, but because the situation with inflation and cost of goods and cost of living, et cetera, is highlight or if not aggravate what is already there, which is the rich-poor gap. I mean, most of these countries don't have great Gini coefficients. Let's be honest there, right?
Yeah, that's right. I mean, there is that risk. We've just had, for the last few years, we've had significant protests and changes of government even. For example, in Nepal and Bangladesh, we saw changes of governments through protests, many of them led by young people. We also saw significant protests in Indonesia and Philippines. That did not lead to any changes of government, but nevertheless, there were very loud signals from a population that had concerns. Now, this is before this war started. Now that the war has started and inflation is going to bite, is going to come down, this sort of discontent can easily increase. Typically, societies can handle pain if they feel that the pain is equally shared, or at least mostly equally shared, and they feel like they have good governance and governments are accountable to them. They will be willing to take pain of this kind, which really has come from an external event. But if that is not present, as you said, if there's inequality, more than equality even, there's a sense that the government is not working with everybody, then you can get also protests back. And governments have to be very careful. I think they are cognizant, most of them. You can see the headlines, they're announcing steps early to try and mitigate this crisis. They're trying to communicate with their populations. But it's going to, we are still at the early stages of what this can be. If this thing goes on for another month or so we are talking April, if we are in the same situation in May, we are going to see a lot more and potentials of the kinds of things that you just mentioned.
Well, thank you. I will say that the recent news has been showing that the Global South governments have been actively trying to hold on to demand by working from home arrangements. They have also been coming out with information such as subsidies for the oil. Now, I suppose this will mean that the fiscal deficit for majority of the Global South to worsen this year. Thinking about that, what do you expect coming out from the higher fiscal deficits?
Yeah, there's no doubt. I mean, fiscal space is going to be a critical determinant for all sorts of things, including their ability to borrow and so forth. Now, certain countries have strict limits on what they can run. For example, Indonesia has a 3% limit. Indonesia is not the most stressed country in terms of energy imports. But nevertheless, all of this is going to affect their spending plans. We're already seeing some cutbacks on the government's spending plans for example, meals in schools and so forth in Indonesia. We can expect more such very careful ways of trimming back expenses. At the same time, these governments also have to support the most vulnerable populations, who are typically, by the way, most affected by energy crises, because they consume more as a fraction of their income than an upper middle class family or a wealthy family. So it's a difficult balancing act. Also because we are not just going to see inflation, but also reduction of growth. So we are looking at stagnation. This is the worst of all worlds when central banks, for example, are caught in a bind. To increase growth, they have to cut rates, but to rein in inflation, they have to raise rates. And typically, inflation tends to show up more in politics than growth. But, specific situation in every country also feeds into this. So I don't envy the jobs of governments right now in the global south, including in developing Asia.
Oh, gosh.
Goodness. I'm curious, I have to ask you, Sarang, it's sort of binary right now. Either we get a negotiated solution, a peace to the war in the Middle East, and the fighting stops and people stop dying, or this continues. It's binary. Just your sense of it. How is this going to turn out, at least short term?
It's a billion-dollar question. I wish I knew the answer exactly when this will end and how it will end. But I think currently there are only two pathways. One pathway is that this gets worse because both sides are dug in and neither side wants to comment. That is where we are now. The other option is there will be some breakthrough. We are seeing some mediation by 4 countries in the Middle East at the moment. We are seeing some back-channel conversations as well. And so there may be a point where domestic concerns, and even in the United States, because nobody here wants gasoline prices to stay high, go higher in an election year. So ultimately, it's going to be these domestic pressures, these domestic realities that bite, and politicians have to take those into account. Now, the sad thing here is that Iran is fighting. It perceives it to be for its survival. And the way the government there has framed it is indeed in a sort of existential sense. And they are getting bombed in many ways in the heart of their country, their cities, even their universities. So this is a worse situation than what I have seen in wars for a very long time, including in the Ukraine theater. And I must say, I'm not the most optimistic person right now, but then again, miracles do happen.
All right, we can only hope. Sarang, it's been fantastic talking to you. Great value. Thank you so much for your time. Please keep safe where you are, and appreciate you talking to us. Sarang Shador there from the Quincy Institute. Our guest from Indosuez. That is going to do it for this Tuesday morning edition of Squawk Asia. I'm Martin Sung at the SGX. Keep it right here on CNBC. The China Connection is coming up next. Keep safe. We'll see you tomorrow.